Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Jen Josey. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josey, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is time management for the busy investor. Let's face it, real estate investing can feel like a full-time job on top of your actual full-time job. Between analyzing deals, managing contractors, and keeping up with market trends, it's easy to feel like you are drowning in to-do lists. But here's the secret. Mastering your time is what separates the overwhelmed from the unstoppable. Here are 5 actionable tips to help you take command of your schedule and make every minute count. Number 1, prioritize your power tasks. Identify 2 or 3 activities that actually move the needle in your investing business, like making offers, networking, or following up on leads. Focus on these first thing in the morning every single day. Number 2, block your calendar. Set aside dedicated time blocks for your top priorities, whether it's 30 minutes before work or an hour on the weekends. Treat these appointments with yourself as non-negotiable. Number 3, leverage technology. Use tools like calendar apps, reminders, and project management platforms like FlipperForce to keep you organized and on track. Automate repetitive tasks whenever possible so you can focus on what matters most. Number 4, delegate and outsource. Don't be afraid to hand off tasks that drain your energy or eat up your time. Think bookkeeping, basic admin, or even property showings. Protect your bandwidth for high-impact work. And number 5, my favorite, embrace the power of no. You can't do it all, and that's okay. Say no to distractions, shiny objects, and anything that doesn't align with your goals. Guard your time like the precious resource it is. So, remember, time is one thing you can't buy more of, but you can control how you use it. Invest your hours wisely, build habits that support your goals, and watch your business and your badassery grow. Now, on to today's episode of the Real Estate Investor Growth Network podcast. Today, we have Zachary Beach, the CEO and partner of SmartRealEstateCoach.com, transforming W-2 employees into creative financing real estate investors. With a true passion for business building, Zachary is also a partner in Original Real Estate, Watch Street Properties, and Prosperity.io. He's an Amazon best-selling author with titles like Real Estate on Your Terms, New Rules of Real Estate Investing, and Sell with Authority for Real Estate Investors. At just 24 years old, Zachary took his first big leap, leaving bartending and personal training behind to jump into the family business, knowing absolutely nothing about real estate. Through hard work, in-house training, and a ton of implementation, Zach and the wicked smart community now operate all over North America, completing hundreds of creative transactions and helping students do the same, often with little or no money in the deal and no banks involved. We are happy to have him on the show, so welcome, Zachary Beach. Woohoo! How are you?
Thank you very much. I am doing awesome. This show has been fun so far already. And I haven't had to say a single word yet, and it's already been fun.
And you have your own podcast, correct?
Yeah, we have the Smart Real Estate Coach podcast. Yeah, I think we're over 500 something episodes now.
Wow.
And it's been a long time coming. Yeah, it's been an interesting journey, as you can imagine.
Well, that is impressive. I'm halfway there. I think this is going to be episode 261 for us. So
Perfect.
500. That is fantastic. Well, Zachary, I want to keep wanting to say Zach, but it's Zachary. For the listeners who might not know your story, how did you go from bartending and personal training to owning multiple real estate businesses? Let's start there.
Yeah, well, if we go back even further, I always had a passion for entrepreneurship. When I was about in fourth grade, I used to collect golf balls in the tall grass and then go ahead and sell them at the eighth tee box for $1, which is absolutely insane nowadays to put that into play, because I was leaving so much money on the table. But what ended up happening was I had that passion, but what I really ended up discovering as I was in high school and then in college was I definitely eventually wanted to work for myself. And the opportunity to do so really came at a couple different things. First, it came through bartending, I know I worked at a bar, but really you had the ability to operate your own bar and kind of create your own ecosystem, which was really cool. And I learned a lot. And then I knew I needed to make more money. So I went ahead and started personal training as well. But as you can imagine, you start to get burnt out relatively quickly as you're working late nights and then you're working really early mornings.
Oof.
So when I was about 24 years old, about 25, when I was been doing it for about 3 to 5 years in there, I approached my father-in-law, Chris. He just kind of got through the 2008 crash. I know you guys had him on the podcast as well. And he kind of was revamping this new business using these new strategies. And I said, hey, I don't know if I'm going to like real estate, but it's going to be a heck of a lot better than what I'm doing. So I threw some more stuff on my plate as the good type A ambitious person I am. And I started making cold calls during the afternoons in between those other 2 gigs. But then eventually I got to my first deal, which was certainly had its ups and downs as well. I got through my first deal and I realized I could see myself doing this longer term and in a bigger capacity. So burned the ships and jumped into real estate full time about 6 months into it.
I love the phrase burn the ships, because you're not even giving yourself a plan B to fall back on and going full force. I love that. So working with your father-in-law, Chris Prefontaine, and by the way, go check out his episode. It was released at the end of February. You guys run a phenomenal business, but in line with going from your, being a physical trainer and working as a bartender, what do you think was the biggest mindset shift? Because my listeners are, they're driving to work right now. They're sitting in traffic. It's the grind, and they are so ready to leave their W-2. But what was the mindset shift for you to make that leap and succeed in this industry?
Yeah, it's a great question. And look, I'm not naive to think like if you are in your 30s, 40s, 50s, 60s, and you got a family to support, that it's not as easy, quite frankly, to be like, all right, I'm just going to me being 24 years old, I don't have much that I have to take care of. I was looking more for a personal change, because I knew I was put here to do something bigger than what I was doing. And I just couldn't foresee myself doing that exact same thing, because I saw everybody that was in the industry, as we called it in Newport, Rhode Island, in the industry. And really, you had 2 choices back then. And you either got really ambitious and you became a manager and then eventually probably owned a restaurant, or you continue to kind of go through the free-flowing bartender life. And I just couldn't see myself doing either one of those paths. And eventually I wanted to have a family. What does that mean to the listener right now? It means that if you have a clear understanding of what you want in life, and usually that's the problem, is that we're listening to this podcast, driving in the car, and we just want something different, but we don't know exactly what we want. So we're not willing to fight for what we want, because we're not clear yet. So if you're listening to this, getting super clear, and this isn't like a one night journaling session. This is months and months and years of work. Like even, going on to this now about 11 years in real estate. I still am trying to refine and get clear. Like I know I've jumped on a plane, just got back from Minnesota last night where I was meeting some clients and helping them build their real estate business. And, landed at midnight. And, throughout that flight, I'm still journaling, still trying to figure out, why did I like this? What about that trip that I liked? What about the trip that I didn't like? So that way I can continue to fine tune it. So from your listeners here, I need to get really clear about what I do want, because you mentioned earlier about time, right? And giving you some tips. And shiny object is a huge thing. And why do we have shiny object? It's because we're not clear about what we want. So we think that everything is going to provide something different or give us a different feeling. And that's usually what we're chasing. We're chasing the feeling. So getting super clear, because then once you're clear, it becomes a lot easier to identify what the exit strategy is going to be. Like, do I want to be a real estate professional? Okay, well, if I actually do, then what strategies do I want to do? Because as you mentioned earlier in your the beginning,
badassery bestowment.
Yeah, and the bestowment, love it. That's the $5 word for you. And the bestowment, you talked a lot about it becoming a new job, right? It's the full-time job after the full-time job. So if you're going to sacrifice that type of time and effort and energy, you better want to do it, because a lot of us fall into the W-2 job because they expect, the world now expects us to go figure out what we want to study at college when we don't even know what we want to do leaving high school, and then to build a career around it. Well, this is your opportunity to choose your secondary career, your transition career. So now it's like getting super clear on that and then identifying what gets you excited. And then it never becomes a job per se, right? It becomes the exciting thing that we do that's going to eventually produce the income or the results that we want. So I know it probably wasn't the direct answer you're looking for, but clarity is the biggest thing that will help all of us make better decisions.
I mean, to me, Zachary, that was the perfect answer, because you are actually talking like a coach, which is why I love having you guys on the show with the Wicked Smart community and the smartrealestatecoach.com, because so many of these gurus out there say, oh, you just got to get a property under contract and sell it and you'll make $10,000 and be a wholesaler and boom, it's that easy. And, but you are starting with where, from page 1 in that journal or whatever you're documenting all your thoughts, and determining your why, determining a goal of what you want in your life. And you're talking like a coach, and I absolutely love it. So I think that was the perfect answer, because a lot of people just hear certain things and they go in all different directions, but it's really what you want in this industry. So thank you for saying that. I thought it was fantastic, and really determining your goal and have laser focus towards achieving that goal, and then putting the correct people on the bus in the correct seats to help you achieve that goal. So your coaching program focuses on creative financing. So for the listeners who may not be familiar, what exactly is buying real estate on creative financing and without banks? I love this one. So let's dive into that, what you all focus on with your coaching program.
Yeah, so the strategies that we use are through creative financing, but to build upon the last thing we talked about, really we focus on 3 main things. That's the mindset, the skill set, and the systems around growing a creative financing business. Because quite frankly, the difference between somebody that steps in and can do a real estate deal in the next 30 days versus the person that takes 365 days to go do the deal is what's between their ears.
Yes.
Because we all show up to this world with different challenges, different paradigms, different walks of life, and in different levels of awareness. So just being able to identify that first is going to be most important, because the skill set and the systems, quite frankly, are the easy part. Because if you continue to chip away and you continue to be persistent and work on a skill set, eventually you're going to accomplish it. Now, for some of us, does sales come easier? Sure. For some of us, does creativity come easier? Sure. But if we all work hard at it, we have lots of engineers that never, ever want to pick up the phone in our community, but then can eventually get to a real estate deal and then, quite frankly, be really profitable after that as well, because they're just persistent and work hard at it. So knowing that as the background, the 3 strategies that we focus on are lease options, buying properties subject to the existing loan, and buying properties on seller financing. And really, to keep it more surface level, and I can go as deep as you want, but just to bring clarity, it's just we have three rules. We don't personally sign and guarantee loans. We don't put down large down payments, especially in comparison to the traditional market. And we don't use banks. And why is that all the case? Because in the 2008 crash, the only way to get back into real estate was using those rules as a necessity. And now it's a choice. And it's a choice now because we know that we can buy real estate deals by solving a problem. It's like the analogy, I think Warren Buffett says, it's like trading the paperclip for a house. What we're really doing is we are solving problems that the traditional market either can't solve or chooses not to solve. And because we are able to do that and create a win for the seller, we get rewarded by getting an asset. So really, we focus on two main things and further along, and that is, and using all those strategies, is one, motivation. Why is the seller selling? And that could be super positive, meaning there's about 40% of properties in North America that are debt-free. So a motivation could be, I just want more money, or I want to push out my capital gains, or I want to cash flow an asset that I already know, like, and trust, but I don't want to manage tenants. All the way to a negative challenge, which tends to be usually more financial, which is, look, I'm in a bad position with debt. I can't make the next monthly payment, or I'm behind on payments, or I have no equity. So we look at that motivation, and then once we kind of determine, okay, can I solve the seller's problem? Then we focus on the financials on the property. What's the purchase price? Is there debt? What's the interest rate? What's the monthly payment? What are all the expenses? And can we make money? And once we identify that, then we figure out which tool do we use. And then that's really the strategies from there. It's like, do we use lease options? Do we use seller financing? Do we use subject to deals? Do we use a combination of a couple of them? So that's all we're doing, is just giving more tools to an individual to create more deals with less risk. So that way they can go ahead and build and scale their portfolio.
Well said, all of that. So thank you. But a question though, so dealing with sellers, what are some of the misconceptions they have about this creative financing? And to tack on to that, I'm seeing that the banks are I'm seeing it on Facebook a lot, where the banks are calling the loans for subject to, and they did the land trust, they did everything right, but now they feel like they're getting in trouble. And so what are some of these misconceptions about the actual creative financing process for the sellers?
Yeah, what's interesting is, if you talk to the top creative financing people in the industry, it is extremely rare that a due on sales clause gets called.
Really?
And it's usually called because the individual who bought the property isn't making payments.
Correct.
So if you're morally and ethically doing creative financing the right way, right?
I'm hugging you through the camera. I love that you just said that. Keep going. Sorry.
Well, that's what real estate is. I mean, you can make a lot of money doing it the wrong way, and you can make a lot of money doing it the right way. And if you don't want to show up on, MSNBC, then you do it the right way, because there's plenty of ways to make good money. And honestly, the tools in which we use, especially strategies like subject to, you have to be an integrity type investor, because people are trusting you to do the right thing with things, that are attached to their credit, or to do the right thing with an asset that they're willing to finance because they see you as a solution. But one of our core values is to complete all transactions with the highest integrity. So that is how we always are set up. And honestly, with the popularity of creative financing, we're starting to see more and more challenges because other people are not doing it correctly.
Yes.
I have never been on a plane so much in my entire life to speak at events because of this exact thing. It's not to bolster the popularity of creative financing. It's to share with people the right way to do creative financing, because now they have heard of it. Because we were doing it way before it was cool, way before it was popular. Now we have to show people, here's the right way. So back to your original question, what are some misconceptions? Well, a lot of misconceptions with sellers are just really getting clear about what the strategy is. A lot of people just have no idea why at first they would sell to you on seller financing, like, because they don't even understand how the mechanics work in seller financing, which means that they're your bank, right? So just understanding, just bringing clarity to how the strategy works is probably the most misconception associated with it. And it sounds general, but it is. We got to identify and educate. We're just as much as educators as we are investors.
Right.
So having that, the due on sales clause is the number one question I get asked in every single speaking engagement that I've ever been a part of. And it's rarely asked from the seller unless we bring it up and then we share with them how we buy everything in trust and how that protects them through that scenario as well. And then probably for the lease option is they don't want to be landlords. So they think they're being a landlord if we buy it on a lease option, but we have to clearly show them that they're doing it this way so they don't have to worry about things like being a landlord because we're their buyer. So a lot of small nuances, but a lot of it's just more fundamentals than anything.
Absolutely. And those are very important because you are an educator and you're educating sellers. Real estate is the largest transaction many of these people make in their lifetime. So this is really, really important to them. So I'm going to use myself as an example. I was a school teacher for 16 years until I woke up one day and realized I hated children. But then during that process, I always lived paycheck to paycheck. I bought very smart, and this is in South Florida. My first property grew rather quickly. So I took that money to invest into my next property. So for me personally, and then for my third property as well, awesome. as a single female, on a teacher salary. So I was very dependent on actually selling the property and using the proceeds for my next one. Yep. Is there any type of creative financing in that situation for a seller who really needs to reinvest their funds? I would assume there's not, but do you have anything else for that particular type of seller?
Yeah, great question. Well, if you have the ability to pull out a HELOC or do a refinance on that and pull out 70% of your debt, right? Or 70% of your equity and then place debt on it, an investor like me would then just take over that loan or structure a lease purchase agreement where I'm making the payments and you already have access to the capital. And then you would wait for the remaining 25% to cash out the next, say, 3 years or something. So that's something that we work with sellers on. Like if they have the ability to get access to capital, they could do it. As long as the property will still cash flow and the debt's good, then we can certainly structure it that way. But even more importantly, Jen, why don't we just share with you how to get into these deals without putting out all your money and having to cash it out, because I can almost guarantee you that if we could sell it, as we sell a majority of our properties on rent to own, if we could sell that asset on rent to own, you probably would get a significantly higher rate of return on that property over the course of a couple of years, as long as you don't need that money. Or without getting too technical, you go ahead, do a refinance, pull out as much money as possible, place a tenant buyer in the property at that point in time, because now you probably have received 70% from the bank, 10% plus from the tenant buyer, and then you have 20% of equity left in the deal for when you get cashed out, plus you're cash flowing the asset during that whole time frame. So now you create passive income versus all active income.
Thank you for that answer, because so many people hit that wall and they just don't know where to go from there. So I love that you have options for those type of sellers, which is a lot of, a majority of the people who are in those they're investing it in the next property. So,
well, Jen, you bring up sorry to cut you off. You bring up a great point. That's why a lot of people are coming to the creative financing strategies nowadays, because they eventually run out of the 20% downs to get into assets.
Right.
Because that's a very slow process, especially if you're trying to accumulate enough income to retire or to exit your current W-2 job or to build a different lifestyle. As if we're buying these things or doing one flip at a time, and we all know flips always take longer than they are supposed to. So now you might be able to do one every 6 months if you're managing it yourself, if you're using your own capital, or if you're buying holds. You're trying to buy one door a year for $300 in passive income. It starts to become such a slow process that if you didn't start planning when you were 21 years old, you're probably not retiring off of real estate right away.
Right.
Unless you look at other strategies, like, do I want to start raising capital? And a lot of people that are working, say, full-time jobs and maybe this is maybe their 1 to 10th deal, aren't super comfortable with using other people's money at this point. So then they just go back to the strategy that they were using, where I'm going to use my own money, and now I'm putting all my own money at risk, and I'm personally guaranteeing all the debt. So it's like, now let's look at alternative methods like creative financing, where you can get into these deals without as much money. You can spread out that dollar much longer, and then you can use rent to own to accumulate cash now, monthly income, and profits in the future as well.
I was just on a coaching call yesterday where they were so afraid to use other people's money and to leverage. And I'm like, hold on to your money, for in case something happens, because just like you said, construction projects never finish when they say they are. They always are running longer, etc. So before we move on to the next section here, can you share a real world example of someone in the Wicked Smart community that did a amazing deal where they were able to use creative financing?
Oh yeah, for sure. We have he's actually one of our coaches now, but Rick is his name. He's up in New Hampshire. He was a defense contractor for 30 years. And prior to that, he was in the military in a submarine, which, and when he tells me stories, I just get like the heebie-jeebies. I couldn't imagine being stuck in a submarine for 6 months, time out to sea. But he went ahead and he wanted to retire. He was government contractor, noticed that like at the end of the day, he wasn't going to have enough money to live a lifestyle he wanted, and had 180 people reporting to him. So he ended up joining our community, and he's one of these engineers that, talking to people on the phone was not his skill set. So he had to learn that skill set, but it ended up taking him roughly 12 months to do his first deal. But the cool thing was, within the next 6 months, he had enough of a portfolio where he retired by the 24th month using these strategies. And one of the deals that he did was a retired fix and flipper. Let's say he owned about 11 properties, was in the middle of a fix and flip, and the guys began to run out of money, and then the property dragged on, and then he didn't want to go rent the property because he didn't want to be a landlord anymore. So he ended up selling to us on seller financing, no money down, 0% interest rate. I think it was like $1,200. That deal, we ended up acquiring it on a 48-month seller financing note and sold it on rent to own, cashed it out. It was probably an $85,000 all three payday deal with just paying closing costs.
Wow, I love that. So going into the next part of my questions here is, we are in a bizarre market and everything's cyclical going on, and the real estate market is always shifting. So how are you capitalizing on the current market conditions using creative financing?
I love when people always ask me about the market, because the market is this, in my area, within like probably an hour and a half, there's probably 7 different markets. You got like Central Massachusetts, you got Boston, inner city Boston, they have outer city, North Shore, South Shore. So I just say that because the listener could be listening and be like, the market, but really they could be in multiple markets. And what does that mean? That means that they all are operating slightly differently. There's soft markets right next to hot markets.
Right.
But the best way that we are utilizing these strategies is from a whole national market. There's a couple different ways. One is there's really good debt out there that people bought houses for the interest rate, but didn't buy it for the purchase price. And with the majority of markets softening and slowing down, there's a lot of sellers that have barely any equity in the deal. And that puts them in a very challenging scenario, right? These are everybody that bought during, say, COVID with the 2%, 3%, 4%, 5% interest rates. And they expected that the market was just going to continue to skyrocket, and banks were loaning out with 3 to 5% down. So if the market dips in any way, they're going to go ahead and they're going to have no equity. And what we're seeing with just this particular segment is that there's a lot of states and towns now reassessing properties. So now taxes are going up.
Yep.
And then we also are seeing that because of all these natural disasters, insurance is now going up. And it's not just going up for the people that are in the natural disaster areas. They're going up for people nationally because these are national insurance companies.
That's right.
So what does that mean? That means that if the bank loaned the property with somebody that had a 33 to a 50% debt to income ratio, which is very normal, that the increase in taxes and insurance now is putting somebody in a challenged financial position. So what do they need to do? Well, they need to sell at some point if they can't figure out a way to make more money, because most people are not entrepreneurs and can't just go figure out a way to make more money. So this is why you're seeing subject to deals being so popular, because there's a lot of good debt out there and there's a lot of people in a bad financial scenario. But if we can use that strategy to get them out clean from their credit, and somebody like myself steps in and buys, now I can actually improve their credit so they'll become bankable in the near future. And they can step into a different property or go rent, because now we know that renting in most markets is cheaper than owning at this point. So now we can allow that person to make that shift. So that's like one major segment when we talk about that. I think that's why.
Can you give a real high level definition of what sub two is, what that means?
Yeah. So subject to deal is when you go ahead and you buy a property with a title transfers to you or your company, and the seller's mortgage remains in place. So it's buying it subject to the existing loan. Now, you could also buy a property subject to the existing liens. There's lots of things you could buy it subject to. And actually, if you've ever done a normal transaction or any type of closing, on the HUD statement, I believe it's section 313, it's in the 300s, says subject to, and you just place the mortgage in there. And then you, as the investor, now are contractually responsible for paying on the seller's behalf on that loan. So we go ahead and make that payments. Why is that good for both parties? Well, it's good for both parties, like for the seller that's in a position where they can't afford the property anymore.
Right.
And if they're relying on their own finances, eventually they're either going to stop making mortgage payments, fall behind on mortgage payments, have to go take on bad loans to keep up their lifestyle, right? And then eventually it could either go to a pre-foreclosure, foreclosure, short sale. So that's obviously good for somebody else to step in and do that. It's good for the investor, because if you have to go get new debt or new loans, they're at 7 to 8% right now, average across the market, which means that if you buy the property and go get new debt, that property no longer makes money, because now the mortgage payment and taxes and insurance are way too high for renters or rent to own. So instead, we keep the existing debt in place because the interest rate's much lower, which still allows us to make money. So that's why it's good for both parties. And that's why you're seeing this particular segment of the national market where people have little to no equity or behind on payments, us being able to solve that problem.
Well said. And beyond sub two or subject to, are there any trends that you are seeing right now that investors should pay close attention to? Like for me, me as an example, it has slowed down quite a bit, and our days on market is growing. But I've now pivoted and I'm focused more on rentals at this point, just to get some passive income coming in and purchasing them subject to with those low interest rates that I can get my hands on if I can find them. But do you see any trends, market trends, that the investor should be paying attention to right now?
Yeah, you nailed it. I mean, that's the easiest thing to follow is days on market.
Yeah.
One of our number one lead sources since I've started have been expired listings. So properties that were on the market at one point in time, and then they expired. And then we use our database to grab the information, make a call to the seller. Why is expired listings a huge segment? One, they want to sell, they were on the market. And then two is the traditional market, for whatever reason, didn't get them the answer. Either they were too high priced, or they need to go fix things, or maybe they have the money to do that. So now they fall off the market. And now we call them and show them an alternative option. So that is a huge trend. And if you're seeing it, even if you just go on Zillow and you go click on the filter tab and you go all the way down and you put in keywords and you put in seller financing, you'll see a handful of properties where they're openly offering seller financing. So those are some things that I would be constantly looking at, because actually the last two properties I bought were on market. I bought a 4-unit building that was on market subject to, with like 3% down. And then I just put a property under contract while I was flying to Minnesota, subject to, and this was a 2-bedroom condo. So the on-market deals, I think, are going to continue to increase, because the realtors are finally putting themselves in a position where they're educating themselves where 10 years ago, it was like 1 out of 10 agents would even listen to me. And now it's probably 3 out of 10, but still 3 out of 10 for an investor like myself or an investor like you, Jen, or your listeners. If you can get 1 to 10 referrals a year from them, they're easy deals to close because the realtor already has the trust and the transfer of trust from the seller to you. You don't have to rebuild it. It's usually like a 1-call close or, a little bit of paperwork, and then you get the property under agreement. So that's a massive trend that we're seeing across our community is buying deals on market just as much as buying deals off market, because
huge.
The agents, they got to figure out a way to get paid at this point. And if properties are constantly sitting on the market for a long period of time, they're going to lose a lot more listings than they originally were prepared to lose. So they need to find alternative options. So creative financing investors are going to be key in this, because now they become the Swiss Army knife to kind of solve all problems that the other people can't.
Yeah, and I'm so glad you brought that up, because there are many agents out there that are getting left behind because they're not jumping on this creative financing bandwagon. So I just want to reinforce, if the listeners out there, if you are looking for properties, put it in your keyword search, seller financing and things like that, because they will come directly to your inbox if you have a realtor who is doing some searches for you, some alerts for properties coming up. So I just wanted to reinforce that, and very, very good point. And if I have any agents listening, you all need to get creative, because I know your clients are struggling right now, not being able to sell some of these properties. And it's a great way to kind of pivot and still get that off the books. So last part here in the first part of the podcast is you are a Amazon best-selling author. Congratulations. And what was your main reason behind writing these books?
Yeah, it's a great question. I mean, I wouldn't consider myself a writer either. I'd rather more of a talker, I guess. The number one thing was there was no real education, outside of maybe 1 or 2 people in the creative financing space. So we need to share with people that there are alternative options out there, especially to be able to transition in your life. So like my business partner, Chris, would have never been able to get back into real estate unless he figured out how to utilize these strategies by either hiring mentors or attending mastermind groups and figuring them out. So we knew that if we could then be a beacon in that aspect of sharing with people like, hey, there is another way. You just have to go ahead and figure out how to work these skills, because creative financing, in my opinion, is just as much a skill set as is an investment strategy.
Right.
You have to be able to communicate properly and understand problems, and then be able to know what tools you have in your tool belt to kind of create and artistically put together a deal, knowing that there's a handful of constraints, and then you have to figure out a way to make it work. So we just want to share with people how those strategies could work and how they could affect their lives, because they certainly affected my life for sure.
Absolutely. And another tool in that tool belt, I'm glad you brought that up, because, when people put up their blinders and only do certain ways, you're leaving so much on the table there. So my last question for this first part here is, so for the listeners who are on the fence about taking action, what's one thing that they can do this week to move closer to that first deal?
Great question. I mean, I would love to give away our Amazon best-selling book, because education and knowledge and awareness is the biggest thing. So
huge.
If you wouldn't mind, you just got to go to wickedsmartbooks.com/Jen. That's wickedsmartbooks.com/Jen.
That's Jen with 1 N, by the way.
Yeah, 1 N, Jen. 1 N, Jen. All right. So wickedsmartbooks.com/Jen, and just type in your information and we'll ship you out our Amazon best-selling book with a couple others for free. So we know that education, elevates your awareness. And then once you're aware of it, it's almost like the Matrix. Like it's like the blue pill, the red pill. And as soon as you take the red pill, and you won't be able to look at deals the same anymore. You're
right.
going to have to look at them creatively and then make it offer creatively. And then for some reason that doesn't work, then go use banks or cash if that's what you truly want and you truly want that deal. So wickedsmartbooks.com/Jen.
And how do they find the coaching program, all that fun stuff? Let's give a shout out.
Yeah, if you go to smartrealestatecoach.com, you can go ahead and find out all the information on our website. You can also follow us on YouTube, which we've been doing this now for 6-7 years. smartrealestatecoach.com/YouTube. We're on all the major platforms, but that's a great way to educate yourself, and grab the books, and our team will reach out and be in touch with you.
Zachary, thank you so much. We love giveaways on the show. So we are moving to the second part of the podcast here, which is what makes Zachary Beach a badass, which you are. And I use the acronym BADASS. And the first letter is B for book. What's a book that's made a huge difference in your life?
You Were Born Rich by Bob Proctor.
Oh,
I'm
Bob Proctor? Is that the guy from The Secret?
Yes. Yeah, he's one of the guys from The Secret. They have the Gallagher Proctor Institute. He just passed away like last year, but huge influence on my life. I've been to a whole bunch of his events, and being able to think differently, because I come from a single mom where the money never made it to the end of the week.
Yep.
And I've had to make some drastic paradigm shifts. So he's an amazing person to follow, books to read, and I think it'll drastically shift your mindset.
I love that. And I'm a big Jack Canfield fan. So also was on The Secret. That's why I was like, oh, Bob Proctor, I know who that is. All right. The first A in badass is for advice. You have given us excellent advice today, but what's the best piece of advice you've ever received?
Yeah, it's hard to break it down into like one piece of advice.
Right.
But what I've been following recently, because I'm a type A personality, super goal driven, and I tend to focus more on the outside world than the inside world. So a big piece of advice was that if you change what's going on the inside, the outside will drastically change as well. And it's way easier said than done, because you're like, I just want to change everything around me. But the focus on consistently, journaling and identifying what's going on in my inner world always brings about a much, much better, much calmer outside world.
Journaling is so huge. I used to hate it, and now it's just part of my morning routine, and it makes everything work, because you're putting your thoughts on paper, and it kind of slows it down a little bit for someone like myself. So I love journaling, and thank you for saying that. I could never get my husband to journal, but anyway, so thank you for being representative of the male community and be proud of journaling. All right. The D in badass is for drive. What drives you to be successful?
Changing my family tree. It's the big thing that I focus on a lot. I mean, I'm always wanting to build more wealth and make a bigger impact, but especially as now I have a 5 and a 7-year-old, I find sometimes that even just changing the family tree is just trying to say the right thing or try to act the right way. So that way they emulate. I wish I was better at it, but I'm working on it.
Fantastic. And they are lucky to have you. All right. The second A in badass is for aspiration. I'm a big goal setter. So what is a goal you are currently working on?
Yeah, utilizing our strategies of creative financing along with raising private capital to take on bigger projects. I've been doing single family homes for a very long time. We train on single family properties because we sell them rent to own. But if we talked about trends, the amount of creative financing deals popping up in the multifamily space because of the interest rates is a huge opportunity. And with my background skill set in that, and that's so over the next 3 to 5 years, very much including that in our portfolio.
I love a good duplex, triplex, and a quad. The other ones you all can keep, but I do love the smaller multifamily. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success?
Yeah, if we just went strictly on tools, a good friend of mine has helped us really build out our systems. Damon Remy from REI Black Book.
Oh, nice.
Friend of mine. And they bring in a ton of AI, and he got me on the AI train as well. ChatGPT is now my best friend, and we talk daily. The REI Black Book has helped us really build out our system so that way we could focus on helping the right sellers at the right time, and then be able to kind of put everything else into automation at the end of the day.
And that's reason number 2 why I like journaling, is because ChatGPT is taking over so much. So it still is the words coming from your brain when you're doing journaling. So anyway, I'm on a journaling kick, clearly. All right. I could talk to you all day, Zachary, but the final S in badass is for success. What does success mean to Zachary Beach?
Yeah, I think it's the same thing that I'm aspiring to, right? It changes the family tree. So if I can make a drastic difference, not only on my kids, but their kids, I would consider that to be success.
Well, I am so very impressed with you. I'm impressed with your organization. I love that you think like a coach and you're inspiring others, and you did so on the show. So thank you, Zachary, for being here today. I really appreciate your time.
Hey, this was fun. We're all
Absolutely.
bad now.
Yes, we are. Well, that is all. And thank you for listening. And we will catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of RAIN by registering on rainmastermind.com.